Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 4th of October. Starting off with the FTSE 100, which is in mid-range, but we have a falling 50-day line, well below the 200-day moving average at 76.40, and especially while we're below that 50-day line, 75.25, we're looking at a possible retest of September support around the 73.70 level, but rather sideways and rather stagnant market, so hopefully not getting a big move on the downside at least, if not on the upside. Moving on to the DAX, and here we're on the edge of our seats, or we were on the edge of our seats to see whether the market would stay above that support line there from back in May. Obviously it has fallen through it, and we're going to see whether we can close back above 15,100 to avoid a retest not only of the late March support there at 14,800, but also the low of that month at 14,400. The big problem here for this market is that the whole of this year looks like a topping action, especially with that final rally that we had at the end of July, and then the gap down. Persistent failures at the 50-day line, so the best we're looking for at the moment is a return to the 50-day line at 15,700, which seems to be a long way away at the moment. So looking for a rollover there to the downside on the DAX at the moment, especially while we're below recent resistance at 15,500. Moving along to the Dow, and this is not a prettier picture either. We've fallen back below the 200-day line, 33,800, so that's a bearish movement by definition, and looks like we're heading towards May support, 32,500. Only an end-of-day close back above the old September support there, 33,300, really delaying the downside, but it does look as though the bears have got the bit between the teeth, and obviously it is October, not a great month for the stock market, so far doing exactly what October tends to do. On to Bitcoin, where seems to be a divergence between Bitcoin and the indices, which is quite nice, or was quite nice. Managed to get through the 200-day line to start this month, but just now nestling on the July resistance line there, 27,200. Support at the 50-day line and an uptrend line there from back in January at 26,400, so hopefully we stay above that. What we'd like to see is a weekly close through 28,000 to take us up to 30,000, ideally by the end of this month. On to the stocks, and compiled an interesting, maybe a more varied selection than normal. First up is Aterian, where the idea that the shares would at least get back up to 1.1 pence at the top of that rising trend channel from November last year looks like it is on. We're looking or feeling bullish while we're above 0.95, which was resistance on the way down back in August, and an end-of-day close or a weekly close above 1.1 pence could take us up for a retest of 1.3 pence as soon as the end of this month. We've got the 50 and 200-day lines both rising now, so that is a positive, and that suggests that we could have further momentum here, even though we're down a tad today. On to Arkle, which I covered recently, and we're looking at it again now. Here we had that rather strange rally and then all the way back again, and I suppose with these little tiddlers you have the risk of people just selling because the share price is up and they need some cash, but second time lucky, hopefully above the 200-day moving average at 0.43, and if you're fussy I suppose above 0.5, and we could be heading up towards the top of that broadening triangle from back at the same time this year at 0.9 pence, maybe by the end of next month, or perhaps the end of this year would be a fairer target in terms of time. Moving along to another stock which is of interest at the moment. I can see a lot of people on Twitter trying to catch the falling knife. That is Horizonte, a horrible breakdown for the shares, obviously, especially given the way that going into as recently as July, the shares looked like they were going to go up for another leg. But since then, a massive breakdown, and we're not even able so far today to hold above yesterday's low, which was 16 pence. We really want to see an end-of-day close back above 16 pence so that we can maybe retest today's 22 pence high. So that's all we've got at the moment for people who enjoy trying to catch that falling knife. RSI at 3, which is about as oversold as you can get. So that, again, would suggest that there can be a dead cat bounce, but only with the price action back above 16, maybe on an end-of-day close basis. So 16 to 22 there in play today's range. On to Helium 1, where I was expecting the helium to flow by the end of last month. So far, what we see here is that the shares are actually toying with the floor of that island day reversal. So that the high there was around 5.1 pence. It was 5.1 pence. Need to see an end of day close back above that to reassure us that the shares can then head back up to maybe 6 or 7 pence over the course of October. Obviously, that's without the binary bet news or the binary news that we might have in terms of helium. Worst case scenario at the moment is that we head towards the bottom of that broadening triangle from back in November at 4.2 pence. And obviously that takes us very near to the all-time support for this market, all-time lows, just below 4 pence, I think, on the day that the shares came to market. Moving along to a less high-profile situation, i-Nexus, and here the interest provided by the charting setup that you see now. We've broken a line of resistance there from May last year. That was around 4.25 pence, above 4.25, looking for as high as 8 pence by the end of next month. Helped along by the way that both the 50 and 200 day lines are both rising at the moment. That tends to be the equivalent of a golden cross. On to Kropz, which I haven't looked at for ages, and here you can see that the share's trying to break out of that triangle formation in place since the beginning of May. 3.4 pence is the level to break, so that's quite a long way away now after today's fall. Want to see the shares remain above the 50-day line at 2 pence, if nothing else, and then that gives them a chance for another push to the upside. The reason that this may be a recovery situation is that we've got an extended uptrend line in the RSI window, so that bullish divergence does suggest there has been some accumulation in the stock over the near term. On to one of the best stocks of the year, and I'm sure it'll do even better, I suppose, over the near term, over the last quarter. Here we've got Oxford Biodynamics, which managed to beat the red best case scenario line there around 39 pence, and actually head up to the even better case scenario of 48.49. In fact, we overshot that line, which is great. The current situation is they're probably looking for support to come in just below the 40 pence level, ideally well above the 35 pence zone, which was the previous consolidation area. The reason for including the shares today is that we're probably a day or two away from a golden cross. And obviously in this case, the run up to a golden cross has been the best part of the cycle, the best part of the year as well. So that might push the shares back up towards a retest of 50 pence. And the old autumn 2021 resistance in the low 50s. But the key here is remaining above the mid to upper 30s, obviously. One of the best calls of the recent past has been Orcadian. I suppose it ties with the Oxford Biodynamics situation. The interview was last week, I think, around the 14 pence, 13 pence area. And the shares will also manage to rise after the fundraise. I think it was the 350 grand fundraise. We've got a situation where we're about a week away from a golden cross buy signal between the 50 and 200 day lines, but the run-up obviously has been fantastic. The equivalent of 50 pence on Oxford Dynamics is 40 pence on Orcadian, so let's see if the shares can hit 40 while they're above the 25 pence area. Looks as though they may just be able to do it, especially as the company's in a much better shape than it was just a week or two ago. On to a stock which I don't normally look at, the type of stock I don't look at, but it is Superdry. And here, I think it's Indian expansion, which has got the shares gapping up today. And hopefully what we'll see today is an end-of-day close above the 50-day line at 55 pence. Above that, looking for up to 73 pence at the top of that rising trend channel base from the early part of August. The other exciting part here from a technical or a charting point of view is that we gap down back in the end of August, beginning of September. We've gapped up now, so it's a bear trap island reversal, which tends to be one of the strongest setups you can have, especially when it's backed up by bullish divergence. If you were trading the stock, you would have seen that bullish divergence a few weeks ago around the 40 pence level, and obviously that did work, although as I said, this is not the sort of stock I normally look at. But above 55.73 there for Superdry, especially while we're above resistance on the way down at 50 pence. Onto a requested stock, which is TomCo, and here Just the first signs of glimmers of hope here. Great candle yesterday off the low, so opened at the low, closed at the high. Doing the same at the moment as well today, so 2 days in a row. Can't be a fluke, obviously. We've got a bullish divergence line there from June, and the view now really is that while we're above the resistance on the way down, which was around, say, the 0.06 level, looking for the shares to retest the August resistance at around 0.12 by the end of next month. Best case scenario target up to 0.16, I suppose, by the end of next month or going into December. Moving along to the bears' favourite, at least in terms of being an attacked stock by the bears, and here we see Tern still trying to crack that 6.25 level. We want to see an end of day close above 6.25 to take the shares up to 8.5, which is the top of that rising trend channel base from back in March. Ideally, we stay above the 200-day line at 5.75, but of course, the big issue here is whether the charting position will be spoilt by any fundraise. There tend to be quite a few of those in the mix. On to Vast, and here I think there was a funding update. We see the shares still hugging the 50-day line area around 0.28. Want to see an end-of-day close above 0.28 to suggest that we got a new leg up towards 0.44. Obviously, at the moment, that seems a long way away, and ideally we hold above 0.24, which is the recent support area. Valirx, one of the other big winners, charting winners, let's say, over the recent past. It was spotted around the, I suppose, the 6p area, breaking the 50-day line, and the target then was up to 10p, which has been achieved. In fact, it was a bit of an overshoot. The current view is that above, let's say, 9p, and especially above the 200-day line, looking for up to 17p by the end of next month. It'll be interesting to see what kind of news would deliver that kind of target. Going on to Wildcat Petroleum, which has obviously not had a great time in the recent past due to geopolitical issues. Here we can see that the shares are consolidating along or against a rising 50-day moving average. That can be the sign of a turnaround, and so at least above 0.3, looking for a retest of the September resistance at 0.5. But the main thing is there to stay above 0.3. Finishing off with Zanaga, which again was a great mover earlier in the week. We hit our initial target there around 8 to 9p, and the longer we can stay above yesterday's support around 8.25, the greater the chance of a follow-on move up to filling that gap down from the end of June at 12.25, and hopefully that can happen sometime this month. The real sizzle here with the two unfilled gaps to the upside through the 50-day line at the end of last week. That's it for me today. More updates tomorrow.